we finish the session, do you try to look at the charts and look at imbalances?
Yes, and I also try to write a note again, show the chart.
Okay, that's great. So if we finish the session, you are just try to look at them in the charts, because it may be difficult to see them in the charts, in the real charts.
Oh, okay.
Yeah. So practice makes perfect. So I just wanted today to talk about liquidity, because this is a very, very, very important part in trading. Okay.
Yeah.
This is very, very, very important. Have you ever heard or even tried to learn about liquidity? Did you try to learn?
The liquidity?
Yes.
No, not yet. But I heard this name before.
Okay. Do you have any idea of liquidity, what liquidity can be? Maybe any idea which you have?
I think it's kind of big institutions induce the traders enter the market.
Induce. Oh, I heard it. It does what you said.
Yes.
I did not hear well, You said.
Okay. Yeah, I said liquidity is kind of the big institutions. They try to push the price upper or downward. I mean, and induce the traders to enter the trade early before it go to the right direction.
Yes. Of course. That's true. That's true. Okay. That is very, very true, because that's what is usually happening in the market. The big institutions or the smart money, the market makers, they usually try to create what we call traps, trying to put some areas where other traders may think this is a good area for me to enter, either to buy or to sell. Okay. But it is always a trap. It's not a good area. So they usually put that in order to take them out. Okay. So when they take them out, they accumulate a lot of money. Okay. From taking out their stop losses. When they hit stop losses of many people, that means they take a lot of money. Is it?
Yes.
And then for that amount of money that they take, that's the amount of money that the amount of money that they will use to push the market to the right direction with a very strong momentum. Okay. That's why we usually say, when you see liquidity happening in the market, expect to see a very strong move, a very strong move, a move with a very big momentum. Okay. Because they have already accumulated money, and now they can actually use that money to either buy. And when they buy with a lot of money that they have accumulated from early buyers. Okay. So they will push the market with a very strong momentum. It will just take a few minutes for the market to go either down or up. Okay. Yeah. And the real kind of liquidity is that one you see a very big wick. You see a wick, not a body. Okay.
A wick. Okay.
Yeah, the tail, you call the tail, not the body of the candle. Okay. So you will actually see sometimes it will be a very long wick, or just a medium-sized wick, which will go above your either the point of interest where people wanted maybe to sell. You will see a wick closing that level, going up and then closing down. Okay. So it is always a certain kind of just a trap. It's, for example, one of the type of liquidity which we can actually use You can just say the equal highs or the equal lows.
Okay.
Yeah, I'm trying to, what is this again? Is it network or? So do you hear me?
Yes.
Okay. I just want to try to show it in a simple way before we see it in reality. So it is always like a trap we call a manipulation, another word, you can call it a manipulation, where this market makers tries to create areas where people may think this is the right place for me to sell, especially those people who trade like double tops, double bottom, trend lines.
Okay.
So they usually use those types of entries. You know, people say I'm going to enter when I'm going to enter in a, I'm going to sell in a resistance and I'm going to buy in a support. So they usually use those people as type of traps. They create those areas, they create some equal highs, okay? And then they use those equal highs as traps. So they go above those levels or below those levels. And after that, they go to the desired direction, to the same direction that those people wanted to trade, okay? But they first hit their stop process. They take them out and they continue in their direction.
Okay.
Yeah, that's something that always happen. It is what we call market makers. So you like, let's take an example. It was like this, maybe. It was like this. Like creating resistance, is it? So they just go a little bit above there and then they continue going down. So this was like a resistance. So they use it as a trap. That's a kind of thing that they usually use. They use this to trap traders. Okay.
Okay.
So you should always be very, very, very careful when you see some equal highs, equal lows, either a trend line. Those are used as traps. But also we have another kind of liquidity, which is the one which is always the professional one. That's a simple type of liquidity that we always use. Okay.
Okay.
Yeah, let's continue. Let me try to make this. Okay. Let's continue. Liquidity is here. Liquidity. Forex market is a zero-sum game, which means that for a trader or institution to buy or sell one currency, it's necessary there is another trader which is opposite direction. If smart money banks wants to buy a currency pair, will need sellers in the market. So this is a simple explanation of what a liquidity, why there is always a liquidity in the market. Okay. Why the market makers, the smart money always have to create liquidities, have to hunt stop process of some traders. Okay. So they usually say, in order for, as I said to you, in order for somebody to buy, there should be a seller in the market, is it? So this smart money, these big banks, what they usually do is that in order for them to prepare for a sale, okay, they should have a, in order for them, they should what can I say? They should buy, okay. That means if they want to sell, they should buy a little bit. Okay?
Yes.
And for them, in order to buy, there should be sellers in the market, is it?
Yeah.
So what that means, let me use a drawing to show it clearly. Okay. For example, they want to sell, is it? They want to sell, and for them to sell, there should be buyers, is it? So what they do before they sell, they buy. I don't know if you understand.
They push the price up before
Let's
they
take an
go down.
example. We want to sell, is it?
Yes.
We want to sell. Yeah, let me use this here. We want to sell. We want to sell, but before we sell, before those market makers sell, they buy. Okay. And what that means, before they sell, they buy. That means they create early what? Early selling opportunities. Maybe like maybe it is not drawing. Maybe like this, you know, they are creating resistance. They are creating support. Maybe you say they are creating resistance. Okay. So when they reach here, people are actually preparing to sell. Is it here? Is it because it is resistance? Is it?
Yes.
So people are preparing to sell here, but in order for them to sell, there should be buyers. Okay.
So
So
they push upper a little
they
bit.
push it upper. Okay. When they actually because they knew there was sellers here, is it?
Yes.
So they decided to buy. They went up. Okay. Because they knew there was a lot of sellers here. They have already created the traps now. No, there are a lot of people here wants to sell, is it? So what they do, because there are a lot of people who wants to sell, they are going to buy there. Because in order for somebody to buy, there should be a seller. Okay.
Okay.
So if they see many sellers now now they know many people will want to sell here. They are going to be the buyers. Okay. That's why they buy. They buy. That's why when they buy, that means they go against these people. Okay. They take out their stop process. That's why, because there was sellers, they wanted to buy. So when they buy, people were selling here. So they bought. Okay. And when they bought, they took out these sellers, because when they were selling, buyers entering. So people were selling and everything was bought. Okay.
Yeah.
So when they buy, some traders will say, okay, now it is not going to sell. I'm not going to say I see buying, people are buying, is it? Some people will want to buy here, will want to continue buying. So I see the market going up, now I'm going to buy. Okay. And once those people want to buy, these market makers, they decide to go down to the desired direction.
Okay.
So you can actually see how it is. The market, when for a buyer, there should be a seller. Okay. So they create traps of sellers in order for them to buy. Okay.
Okay.
And when people want to buy, they sell. So they actually do the same thing when what we call, for every buyer there should be a seller. For a seller there should be a buyer. Okay. So that's why you see a stop point. The liquidity happens because for a seller there should be a buyer. For buyers there should be a seller. Okay.
Okay.
That's why they say here, if smart money wants to buy a currency, they will need sellers in the market. Okay. So the existing facility to place these positions in the market is called liquidity. So you can actually say liquidity is that trap that they create. They create a certain trap in the market. Okay. And you can actually see here the explanation, the simple explanation, that liquidity is defined by stop process. Okay. So where stop process exists is where liquidity also exists. Okay. So what you should do, you should actually know that where is the actual place that you are going to place your stop loss. How are you going to enter the market? So you should first be careful of liquidity. You have to make sure you see liquidity. Where do you see liquidities? Okay. Where do you see maybe equal highs? Those are types of liquidity. Where do you see trend lines? Okay. If you see a trend line, that is an indication that it is also a liquidity area, because people are actually expected to continue buying when they see a certain trend line. So the market will actually go down and continue going up. Okay. So you should always be very careful of this. Very careful.
Okay.
So also there are types of liquidities which are easy to understand, and they are the ones that we actually use as liquidities. Yeah, these ones, types of liquidities. Okay. There is buy stop and sell stops liquidity. Okay.
Okay.
Some traders call it, some traders use the word buy side. Okay. Some use buy side liquidity, sell side liquidity. Okay.
Okay.
So these are the ones that we are the major types of liquidities that we can actually use in the market. They are the best ones. They are the liquidities that are the little ones which have been created in order for people to know. So the best thing to do is to actually understand these types. It is very, very important. Okay.
Okay.
Yeah. So what is the buy stop liquidity and what is the sell stop liquidity? Okay.
Okay.
Buy stop. Here we are, buy stop liquidity. So what is the buy stop liquidity? Okay. A buy stop liquidity is originated by stop process of sell orders. Okay. When you see like people are preparing to sell, okay, a lot of people are preparing to sell. That is what we call buy stop liquidity. Okay.
Okay.
So when you see like people are preparing to sell now, we actually have to know that that is a buy stop. It is just like opposite. Where people want to sell is where we call buy stop liquidity. Okay. Because it is usually you see like them, it is usually we usually sell at premium price and we buy at discount price. Do you know that what you can call a slogan?
No.
Do you know what we call premium price?
No.
And when you go to maybe go for shopping or when you want to buy something, when you hear someone say this product is in premium price, okay, it means it is in a very high price, is it?
Yes.
So when something is in a very high price, very high price, it is in a very high cost, that is the best time to sell, is it? But it is not the best time to buy, is it? So what is the best time to buy? It is during discount price, is it? So we usually say premium price is for selling, okay?
Yes.
And discount price is for buying. So you actually have to make sure that you know this. So when you know, even in the market, we say the best time to sell is when price is very high, okay?
Okay.
So when you see price is very high, that's the very, very best time for you to sell.
Yes.
Like the little example is when you see that the chart is moving, you see you saw maybe a very long uptrend, okay? Then you have to spot an area where you actually expect to see a reversal from an uptrend into a downtrend, okay? Because that is the best time for you to sell.
Yes.
So that's how we can actually say premium price is usually high price, is it?
Yes.
And the high price in the actual in the real chart is when the charts are at the what you can say, they are at the top. I don't know which word can I use. You don't have to sell when price is below, okay? So the best time to sell is like when you see that maybe the market moving like this. So the best time to sell is when you see like a change of character. Why today network is not okay? When you see like a change of character, we were moving we were in an uptrend, is it?
Yes.
And now we can actually, we have to make sure we spot areas where we can actually see the market, starting to show signs that it is going to change the trend. Okay.
Okay.
So you see like this. This is what I said. Do you remember I said change of character? Is it?
Yes.
When we break that level, that is change of character. So you have to wait, change of character, and then you wait for the market to go a little bit up and follow where your order block is. Where your order block is. Once you see that, you expect to see market continue selling, is it? So this is the best place for you to sell. Why? Because it is in high price here. Okay.
Okay.
Yeah. That's why we say you should sell at premium price. So you should sell when the market is really at the top. You see the market went up. So you have to spot areas where you expect to see a change in character. Okay.
Yeah.
Yeah. So do you understand the issue when we talk about premium price?
Yes.
Okay.
Okay.
And you have to buy when price is below. When you see like we were in a downtrend, moving to the downside for a very long time, we are moving to the downside. Okay.
Okay.
That's the best time for you to buy. Like
Yes.
you see that we were moving down, is it? And then maybe we created this change of character, is it? Yeah. So we wait for a retracement there to our order block, and then we continue buying. Okay. So this area here is the best time for you to buy. Why? Because it is below, so it is in discount price. Okay. So I was explaining this so that you may actually understand where I say when I say about buy stop. Okay.
Okay.
Why do we say buy stop liquidity? It is called buy stop because it is an area where buying ends. Okay. That means they say buy stop liquidity originate by stop process of sell orders. After the buy stop is taken, the market reverses to the downside because banks use buy stop liquidity to press sell orders in the market. So what you can actually see here is just that you will see the market trying to show you what you can actually say. You saw the market maybe going up. Okay. But at a certain time, you see maybe the market going a very long week going above that level, and it goes down. Okay. It takes out this low. So when you see a very long week taking out this level, okay, that becomes a buy stop liquidity, because this is a point where we ended the buying process and we started selling position. So that's why we say buy stop liquidity is area where we expect, after we see that kind of liquidity, what we call liquidity sweep, liquidity inducement happening, we expect it to sell. Okay.
Okay.
And remember, it is not supposed to be a body, not a body. This area which will break this level, this higher high. Okay.
Yeah.
Should be it can be a very long week or a certain just a medium-sized week. Okay. But it should not be a body. If it is a body, that is break of structure. Okay.
Okay.
Yeah. So this is not actually easy to understand. I don't know if you are actually understanding me, because even to me this was hard.
Yes, it's hard.
Yeah, it is.
And Pedro, may I ask you?
Yes.
I'm not sure. Will you go to the live chat and tell me how to draw the order block, BOS chart and buy stop liquidity?
Yeah, I wanted to explain this first until here with liquidity. Then we go to read chart.
Okay. Okay.
I wanted to explain first about order blocks, imbalances, and liquidity, because these are the ones that we actually have to look at them in the live charts. Okay.
Okay. Okay.
Yeah. So we can actually say, what is this again? You can actually say, you see like this example here. So let's first see the types of these types of buy stop liquidity. Okay. You see this here, what to focus on for buy stop liquidity. Okay. We have this one, what you call previous month's high. Okay.
Okay.
But these ones are just created in order for you to understand. You don't have to actually go and look for a previous month's high. Look at your time frame. If you are trading at 15 minutes, 5 minutes, you just have to look at maybe swing high and swing low, these ones. Okay.
Okay.
The swing high, okay, the swing low, or the previous day high, okay, or the high of the day. These are the ones that we actually use. These ones. Okay.
Okay.
So you just have to, when you are in your chart, you can actually go to there is always that place when we say we have to mark when the new day is opening. Is it? There is that area where we usually mark to know when the new day starts. Okay. Do you know that area where we usually go to mark that? I mark here now, I can just see the separation and the trading of one day, the trade of another day. Okay. Because you know every day the market opens at a certain time. Is it?
Yes.
So you just have to know, when did the market open on Monday? The market opened at this time and closed at this time. Okay.
Okay.
So you just have to, in order for you to know the previous day high, you just have to know, just have to draw the previous day high. Where is the previous day? Previous day high. You draw it to the right. So when the market takes out that previous day high, okay, that is called the buy stop liquidity. Okay.
Okay.
But also when the market takes out the high of the day, during that day, for example, like today it is Wednesday, is it?
Yes.
Well, when we just have to know what is the high of that day. Where do you see the highest point that the market has reached on that day? Okay.
Okay.
It's up to now. You just go to your chart and say, up to now, what was the highest point that the market reached? You say, this is the highest point. That when that is taken, when the market goes above that, okay, that is buy stop liquidity. Okay.
Okay.
I will actually show you on the charts, on the lead charts, so that you may understand. So you may see maybe maybe this was a movement that we were. Now we see the market here. Let's say this is our swing high, is it? This is our swing low. Do you know swing high and swing low?
Yes.
So when the market takes out this swing high, okay? Okay. Hello?
Yeah. I can hear you.
When you see the market going above this swing high, this becomes a buy stop liquidity. Okay. So you are going to expect to see sell orders, the market going down. Okay.
Okay.
Why? Because we usually sell at premium price. Okay, that's the best time to sell. So actually, when you see a buy stop liquidity, like the market took out this swing high, you will actually wait for a market for a change of character. Okay. Somewhere here, you will wait for a change of character, and then you will draw your order block. You will check where you have imbalance, maybe your order block. Okay.
Okay.
And then you wait for the market to touch there, then you sell. Why? Because when the market takes out this swing high, or when the market do a buy stop liquidity, we expect it to sell. Is it? Yeah, that's how you can actually trade. Okay.
Okay.
Yeah, or equal highs. Equal highs are also liquidity, buy stop liquidity. When you see the market creating equal highs, you actually expect to see the market taking them and continue going down. Okay.
Okay.
Yeah, I see we have how many minutes? 4 minutes. We have 4
So
minutes.
may I say the buy stop liquidity is a wrong or is a wrong or area or
What?
I mean the buy stop liquidity
Yes.
is wrong. I mean area.
The buy stop liquidity is a low area.
Not low. I mean it's a area. I mean specific wrong.
Specific.
DOE.
DO.
I mean buy stop liquidity.
Yes.
Is a specific area or price.
Specific area or price.
Yeah.
Buy
Oh,
stop.
that matter. You can show me in the real chart because
Yeah.
I'm not. Yeah. Okay.
You still don't understand it, is it?
Mm.
Yeah. Okay. I will actually do that tomorrow. Let's just, because even if I explain to you, I'll continue confusing you, I think.
Yep.
Yeah. So I will actually do it tomorrow. How we can actually see the liquidities. Okay.
Okay.
Yeah. I'll tomorrow session. I'll just make sure I am explaining about liquidities. Because I think that's very, very important. If you don't understand liquidity, then you are not going to make money in the market. It's not easy. You have to be very careful of this because they are always traps to take you out of the market. Okay.
Yep. Okay.
You have to make sure you know them so that you may actually survive in the market. Okay.
Okay.
Yeah. So I think we should end this meeting now so that I may actually also try to prepare some concepts on liquidity so that tomorrow when we have the session, I may just show you easily.
Okay. Okay. Thank you, Pedro.
Okay, thank you. Have a nice
You
day.
too. Yeah. Bye.
Okay, bye.